Hi everybody, how you guys doing? This is Carol, your friend and your realtor. I'm part of the Coldwell Banker North Haven office and the Michael Stroh team. And I'm actually right here in my office today in North Haven. I came to the office to do something for my client, and I just did a video in Spanish and I wanted to do it now in English. I wanted to talk about this program, and I did mention that before in one of my videos previously, of when Governor Lamont announced this program, the CFHA, which is the Connecticut Housing Finance Authority, is actually helping many families, first-time home buyers. And pretty much, I wanted to give you information about this great program and why not to take advantage of it, right? So I know that this program is going to be for a limited time. We don't know the date when they'll decide to say, you know what, we're not going to offer this no more, and the end of it, But I will definitely encourage all my first-time home buyers out there, all the families that they're thinking about buying their first-time home, why not to take advantage of this? So just to give you a little bit about information of this program, it is pretty much time to own, which is a forgivable, my apologies if I'm not saying it correctly. It's a forgivable down payment assistance. And what that means is that that program, every year, at least for the 10 years, annually, it's forgiving at least 10% of the principal balance. Okay, so let's say, for example, right, you buy your property, and you're gonna be living there for many, many years, because of course that's the idea, right? But you don't have to live the whole years, but it's up to you, of course. But this is helping many families, because let's say if they need assistance for down payment and closing costs, I think this is a great program, definitely. And what is great about this is that this time to own program is forgivable, right? And CFHA is another loan that one is not forgivable, but you can apply for both. So if you can use the time to own forgivable, that program, you can use up to 20% that goes towards the down payment, and 5% it can go towards your closing cost. So let's say if that time to own, that 20% is, let's say, the max, depending on the zoning, depending on the area, that it will get determined by the CFHA. It can be up to 25,000, or it can be up to 50,000. So it's depending on where's the house location, pretty much, So why not to take advantage of this program? Why not? I encourage all my first-time home buyers out there, all the families, because this opportunity is great. And if it's going to be forgivable, why not to take advantage of something that can be applied towards your principal balance, and it can be forgivable, right? So definitely, there are not a lot of lenders that participate on this program, okay? So I do work with a few lenders. For example, Guarantee Rate Affinity. They are an in-house lender, because we have affiliations with Coldwell Banker, right? I have worked also with Liberty Bank. Liberty Bank has their participant lenders, and they do also the loans there through their bank. There are other lenders too, but I'm just telling you the lenders that I have worked with, and they've been helping my clients. Okay, so why not to take advantage of this program? I'm telling you, like, definitely this program is going to help a lot of families. And the requirements, definitely, you need to live in the state of Connecticut for at least minimum 3 years. The most recent 3 years that you have to show, or that you have, to show residency for the most recent 3 years. That's one. You, like I mentioned, you can, the time to own loan may also be used in conjunction with the down payment assistance program, which is the CFHA program, the other loan. So of course there are different requirements that there will look. I think it goes depending on the income that you do. Of course, all that stuff, I'm not a loan officer, but the participant lenders definitely, they can guide you how they do it, and that's pretty much their homework to do. I'm just giving you this information because I still hear many of my clients, and I have clients who will stop looking, One, because they're like, oh my God, the interest rate is very high. The interest rate is too expensive. And, that's one of the main reasons. Let's put it that way. But I think definitely, if you think about it, right? Right now, rent is very high. Okay. So, for example, if you want to rent a 1-bedroom apartment, right now the rent is at least 1,000 or 1,100 a month, and that's not including utilities. Let's put it that way, right? So in my head, I'm like, why my clients, they will prefer to pay somebody else rent instead of applying that money or that monthly payment towards the loan. If you think about it, let's say, for example, $1,000 a month. That's $12,000 in 1 year. Why not applying $12,000 towards your loan, and you're paying for something that is going to be yours, or it's actually, of course, until you pay it off, it's going to be completely 100% yours. But you're paying for something that you're the one in charge. You're the one that you own it, So paying somebody else's, or paying rent to somebody else instead of applying that money towards your own mortgage payment, I definitely see that this is the right time to own your own property, to buy your own property. I know many of my customers are afraid because of the interest rate, but let's be realistic. Let's look at the big picture. When COVID happened, President Trump, right, he decreased the rate to 0%. That's why most of the lenders, banks and lenders, were able to drop their interest rate to at least 2.87%, okay, which we haven't seen that in years, or let's say years even back, seeing an interest rate like that, okay? So that's why many lenders were able to do it. Now, before COVID, okay, the realistic interest rate was at least 4%, 4.25, 4.5, 5%, and that depending on the credit score, that depending on the debt to ratio, that depends on the history, right? So it's not just having a good credit score or having all these main factors that lenders take a look at that when you get a pre-approval, but that was the realistic interest rate before COVID. When COVID happened, the interest rate went down to 2.87. Now, after COVID, 2022, right? Their interest rate are right now, I think, 4.87. If it's FHA, 5.21 to 5.5, depending. But for me, and pardon me if I'm taking this if somebody else will think a different way, but I'm just expressing the way that I think. That's a realistic interest rate, okay? And I'm gonna tell you, to be honest, seeing another interest rate going down to 2.87, that's not gonna happen again. I can guarantee you that, definitely. So I encourage you, in life, I always say there's risk to take, right? But if you don't take the risk, how you gonna know? How you gonna know that, this is going to be a perfect fit for you? It's like, let's say, for example, okay, your credit score can be 650, 640, let's say, right? Of course, the lower the credit score, your interest rate will be higher, okay? But if you think about it, let's say you get the pre-approval, right? And your interest rate is 5%. I'm just saying, like, number like that. Let's say down the road, you improve your credit. Down the road, the banks start decreasing the interest rate. You can refinance anytime. So let's say if you buy your house now, right? And in a month later, the rates start decreasing, you can refinance. And then you can get the lower rate. But then you will refinance based on the loan amount that you have at the time. So if you already pay 1 month, or let's say a year, 2 months is too soon. Let's put it like that, okay? In a year, the rate decreases. At least you're already, okay, you pay 1 year of your mortgage. And if the rate, let's say you got the loan for 230, and then you already pay, and then right now, after a year later, the loan amount is, I'm just saying number, 220, right? Then when you refinance, you will refinance based on the loan amount that is left over, which is the 220. You're not going to apply back to 230. So there's different ways, there's different solutions. So I would encourage my first-time home buyers, don't get discouraged, don't get afraid, because investing, paying for something that is going to be yours and you're going to own it, why not? Why not? But I wanted to give you this video, or this education video, information that pretty much what I've been seeing from my existing clients. And I want to make sure that you guys know what's happening. So definitely, I will encourage you to go to the CHFA. Oh my God, my apologies. It's I always get stuck. CHFA.org. That's the website that you need to go to, getting more information about the time to own forgivable down payment assistance program for first-time home buyers. And if you have any questions, I can connect you with the lenders, the participant lenders. Give me a call, 860-539-1444. I'm a real estate agent. I'm part of the Coldwell Banker team in the North Haven office. I do serve all of Connecticut. And any questions, please feel free to call me. But like I said, take advantage of this program. And I think having the funding, those funds applying towards your principal balance of your loan and be forgivable, it's worth it. It's worth for you to be a homeowner, and it's time to own. Like how that program, the name of the program is Time to Own Your Own Home. Okay, guys, so thank you so much. Any questions, call me, follow me through YouTube, follow my channel, Facebook, Instagram. I have LinkedIn too. And then any questions, call me. Appreciate it. Thank you so much, and have a nice weekend. Well, tomorrow is Sunday. Okay, guys? Bye.